rolling.
We're rolling. So, we were just talking about this. Just keep in mind, there is reason to be going both long and short here, but anything outside the range is always a good entry. First entry short, second entry short. Look where your stop loss is. It's not even just outside the range. It's outside of a major channel. There has to be a major trend reversal for your stop loss to even get hit here. So it's in a really, really effective place to be putting it.
And talking about this trade that we spoke about briefly, the short failure. I was thinking,
From
do you
today.
ever do reversals when your trades fail?
Oh, do I ever like switch positions and go
Yes.
short? Yeah, sometimes. Sometimes. You got to be real careful though, because if you're doing something like that inside of a range, then you're just going to get burned twice.
Hmm.
But if you're doing something like that where you're saying, okay, this is a major point of support, then, and if it fails, then the market's definitely going in the other direction without a doubt, then yeah, it can be appropriate to just flip your position like that if you get stopped out. But you do have to be really careful because most of the time you're just going to get burned twice.
Most of the time, like in this scenario with the double trap, you get burned twice.
You wouldn't get burned twice in the double trap.
Well, if it was like if my short failed and then I reversed a long, then the longs would go out.
Oh yes, yes, you're
Yeah.
right about that. In this scenario, it certainly would have. It most definitely would have. Um, Maybe the best thing that you could do is if you were just a really, really smart and experienced trader. And I'm not necessarily, I don't think I would have taken this long, but uh, I may not even really see it in the moment. Never really know unless you're like in the moment. But this bar right here, this very weak breakthrough, followed by a bear bar, two bear bars, should have been enough of a signal to a really smart trader, hopefully, that he needs to at least put up a break even trade. But it's best to be on the direction of the trend. And if we scoot way over to our left here, we see the trend direction. It's bearish. And so this is what allows us to recognize these short entries that happen up here. Second entry short here. Once again, stop loss in a beautiful position. Entry right here. And then a
You
double
didn't
trap
catch
here.
this trade today?
I was making videos.
Yeah.
Since J Pow doesn't speak till later, I decided to just go ahead and take the time to make some videos for my course.
Awesome.
Okay, any questions about this, man?
So yeah, the profit target in a range is the bottom of the range. You wouldn't ever go further than that.
You can go further than that. It's just you're going to at a minimum want to take partials. If you take, here's what I would do, especially in a large range like this, because you never really know what can happen in a range. Here's what you can do. You can take an entry here, second entry short, fading this range, and then you can go ahead and you can trail each high, and eventually you'll get stopped out here. Or if you're willing to bet all or nothing, you can just move to break even. I'll just say break even's about right there. You can just move to break even and then get rid of your stop, move to break even, and then you can just let the market go and keep this bottom as your profit target. Either situation is appropriate.
So that would be a tough hold after that profit target to anticipate it to go further.
It would be a tough hold. It would be one of those uh, Al Brooks calls them Walmart trades, and I think it's funny. I've kind of adopted the term, but it's one of those you put on a trade and you go to Walmart and you don't come back for a few hours, and you come back and you either won or you lost.
Sure. I like that.
Okay.
So
Any
yeah, and that in that one short failure, I thought about a reversal, but I didn't take it. I didn't want to get burned, but it would
It's
have been
alright.
cool, I guess.
Yeah, that's okay.
Um,
And most of the time, it's best to be patient.
mhm. And then the next one, it looks like I took a little long that worked out for me at the bottom of a range.
Nice. I took that one as well.
And then it looks like I took a short at the top of the range and another short, and then I called it for the day. Yeah, so the
Nice.
rest was good. They started out rough, and then I brought it back, and it brought it back in.
The nice thing about a range, especially a larger one like this, is as long as you can take, as long as you're putting yourself in a position where your stop loss is outside of the range, most of the time you're going to make some kind of profit. Even if you don't get all of the move, like even on this trade here, like it pushed up, you still made a quick profit here.
Mm-hmm.
When I took this trade, I actually got break even on it and then entered again on the second entry here, and it hit my profit target. But, if I really wanted to, I could trail. It's in a range, so it's valid trail, behind the bar if I wanted to. If I didn't want it to go very far against me for whatever reason. Those are all valid. But most of the time, as long as your stop loss is outside the range, you're probably going to win, at least a little bit. And if you lose once, you're probably not going to lose two or three times in a row as long as you're putting yourself in a position where your stop loss is outside of the range. It's
Brilliant. And
it's
then there was also another long entry at the end, but I skipped that one. It was at the bottom of a
right
range,
here,
and
yeah.
the one after that one, after there was another one.
This one here,
That one. Yeah, yeah, yeah.
and this one failed here. Even if you just looked at like long entries, let's just say you took that one. So there's one, there's a winner. Say you took this, that's a winner. Say you took that and that was a loser. Say what was that, one, two or three winners, and then there's a big winner, and there's another winner, and then there's a loser. So out of all of those right there, you've between if you just took every one blindly with no context or reasoning, you have a lot of really good winning trades here, and your losers don't even come close to outmatching your winners. Especially, I mean, you're still around average risk here. You're still around that 2.5 point here, here, here. When you're taking, like, I think that was like 8 point range or something.
And range could be like all day, and weeks, right? Like days.
Absolutely. Absolutely. Especially like before big news events. Sometimes if Jerome Powell has a big conference, then sometimes the markets will just be in a tight range for 2 or 3 days at a time.
Okay, cool. So yeah, that was it was a good trading day. That one
It was.
had to cut out the beginning.
Absolutely. Okay. Let me. Since I'm recording this, I'm not going to take a picture because you can just watch the video.
Yeah, yeah.
Okay, 9:26.
Let's do it.
All right, OG channel line.
Yeah, it looks like I had
Nice short entry.
right on the line, and yeah, I guess I took the 2 points because it was. I don't know. I guess I didn't like how it was right on the line.
Did you just think that the count restarted, or how were you feeling about that?
It's a good question because that was an obvious, clear, like good hold.
Hmm.
But I don't know. Maybe did I send?
So there's a major
Mid
channel
range.
line. I guess this is where we're at here.
Yeah, OG channel line. Um, yeah, I guess I was thinking it could continue going higher. Maybe that was just a bad thought.
That's okay, man. There's nothing wrong with
Right.
that. Honestly, I'd rather you I'd rather you be patient like that. You don't have to take every trade, so that's fine, dude. There's nothing wrong with that.
Yeah,
And
because usually also one thing I've noticed it's like an L. Like if you go back to that, like there's a drop and then there's a pullback. And I've been seeing like an L shape, and then there's another drop. But in this one, there was like an L, and then it like kind of halfway. It didn't go all the way to the low, and then it started coming back a little. So then I
oh,
guess I thought it was a little fishy.
like like in here, it kind of pulled back some instead of going
Yeah,
towards the low.
like when I talk about the L, I'm talking about like now I'm not talking about just like bar to bar. I'm talking about the move, like a big drop, and then there's like a slight pullback. It looks like an L,
Gotcha, like
and
this.
then yeah, but there was like a big one before this one. So like this big one from the day open, and then there's like a slight pullback, and then it's usually another big drop. But this one it didn't do like a huge drop. It didn't it didn't make a lower low.
Mm-hmm.
So I guess I was just thinking it was fishy.
Gotcha, gotcha. There's nothing wrong with that. If you think something's fishy, then let it be fishy without you. Literally, though, I mean, like the principle of sitting on your hands if you don't know what's happening can save you a lot of money.
Yeah, I still took 2 points though, so that wasn't all that.
Nah, not at all. Um, I wanted to point areas like this out to you because I've been noticing them more and more lately. Um, Actually, I can probably simplify it a little bit more to kind of this area. Um, Watch out for chop zones in the market. This is a chop zone.
Mm,
Chop zone is essentially where the market doesn't really go anywhere, and the bars have very long wicks, up and down, very long wicks.
mm-hmm.
So, anything with very long wicks like this, it's called trading in barbed wire, or you can call it chop, whatever you choose. It doesn't really matter, but it's essentially a trading range. And there is a certain way to trade it, but most of the time it's really best just to stay out of it because the chop could just expand a little bit and just be more chop. So do watch out for entries there. Obviously, you didn't enter in there or anything like that. It's just something I've noticed, and I wanted to make a little bit more aware to you.
Okay, great. Yeah, we're gonna talk more about choppiness later. I have a question on that in other charts.
Okay, great. And this is the OG channel line
Mm-hmm.
there. First entry short, second entry short, smart
On the line.
loss. Smart loss right there. Nothing wrong with it. And then what happened? First entry, second entry.
That was my second attempt at a channel fade, which was I should have skipped.
That's okay. It was still a channel fade. I
I
might have
did want
taken that.
okay. I did want to ask you about the first my first entry short here. I was kind of looking back at it because like you see how that first entry short like the bar clearly closed outside the channel line. It wasn't like half in, half out, so that's why I marked it first entry short.
Mm-hmm.
But the one before this trade, the
Yep.
first one.
This one right here.
Yeah, that one.
Mm-hmm.
I was thinking in during when it was playing out live that was the second entry short,
Mm-hmm.
but I skipped it. I skipped it and made it a first entry short because it was like that bar closed outside the channel line.
Oh,
Even it wasn't halfway in, halfway out. If it was halfway, then I would have made it a second entry, but it wasn't. You
I
know.
got you. I see what you're saying. So you're basically unsure if this bar or if this bar was the first entry or if this was the first
Right.
entry. So when it gets to channel lines like this, it can get a little bit confusing sometimes. The general rule, and mind you, we can make general rules in the market, but that doesn't mean that they're true 100% of the time. The general rule is if you have at least one bar holding outside of the channel line, then the count is going to restart. If you have one bar that doesn't touch at all, which you have here, however, the follow through from it, the very next bar also clearly comes back into the channel. I personally would have probably counted this as 1, 2, saying
Hmm.
that it did not completely break this channel because there wasn't any follow through to it with this bar.
Hmm.
With that being said, though, if you're following the rule, then your count is going to restart, kind of like what you said. So it's things like this in the market that are kind of subjective, and we just have to try to put context clues together and try to figure out what the market is doing. I think that I would have counted this as a 2, and the reason why is because, and actually, I'm going to assume that your channel line is drawn. Well, if your channel line is drawn real precisely here, then we actually have 2 bars that are holding outside the range. If we have 2 bars, I think I would have restarted my count. If we
Okay.
just had the 1 bar, like I thought we had, because I thought that this was,
If it's drawn precisely, it might be
yeah,
a little lower or higher. Yeah.
but just try to make it as precise as possible. If you have 2 bars holding outside, then I would restart my count.
Hmm.
If you have 1 bar that holds outside and then the very next bar dips back down into the range, then I would not restart my count. But as a general rule, you do need 1 bar holding outside of the channel to restart your count. So it's kind of a subjective rule. It's just something you kind of have to feel out. But in that scenario, that's generally how I count them.
Understood. Thank you for that.
Hmm.
And either way, I wouldn't have gotten the 4 points here if I was going for that.
No, it was a failure either way. But that's
Yeah.
okay because, like I said, this is a smart loss right here. This is the sort of loss you want to see.
Awesome.
And then the fade, unfortunately, doesn't work, and we end up expanding into an even greater channel, kind of
Hmm.
unexpected. But once this happens, we probably have an idea of where the market is going again.
Hmm. You see, I had another OG channel line
Right
pushing
here?
up
Yeah.
that,
I'm
and I
guessing
saw
it's
that.
this?
Correct. Correct. And it broke that, so that's why I was going for a fade, long fade. Stopped me out one tick and would have profited, but the bulls weren't holding up either. If I was going for the huge profit target.
Pull back to this right here is a double trap. One, pull back, two, pull back, traps you out by 1 tick, and then pushes up again. It's a double trap.
Yep. Look at that.
It happens. It's kind of scary sometimes. It's not fun. This was that channel line. Yeah, it's just a little bit of bad luck, unfortunately. I get stopped out by 1 tick as well sometimes. But then after that, though, it looks like you figured out that we were back into short, and you
Yeah,
came
that
out
one
with a
was a
winner.
little risky. But I was just going with the EMA line on that.
Got you. It wasn't able to break through and got rejected from it.
Yeah, maybe I got lucky on that one.
And then here, 1, 2, 1, 2 at the channel line.
Yeah, the first one was good. The second one was bad, and then the third one, the line at the bottom, I drew it wrong. The line at the bottom, price touched 2 point profit target. It touched it.
Hmm.
It didn't fill, and then stopped me out.
And stopped you out. You needed one more tick.
Yeah,
So, yeah, you need, if you're going for, just as an example, 2 points, you need 2 points and a quarter to actually take two
yes.
points.
And I thought that was it. That was the one too, because yeah, profit target could have been better, but you see how like my stop was outside the channel line, the EMA squeeze, all that stuff. I was
Hmm.
liking that.
It was a nice setup. It was a nice setup for sure. I think maybe I would have been a little bit hesitant
Okay.
to take some of these trades after maybe this area. I cannot draw a straight line on here to save my life. After maybe this area to the right, just because it's starting to be a little rangy. In fact, we can probably pretty much draw a range here.
Hmm.
Yeah. So we started to range out, and so when you took this short here, profit target is down here, and we didn't get anywhere close to it.
Mm.
And then we start to look at things, and we see climactic bull bar, climactic
Mm.
bear bar, bull bar, very little follow through, bear bar, climactic. We know that we have to be in a range, so we have to draw it out.
Have to draw it out.
Now, even here, you can look and try to take entries with your stop loss outside the range, um, but we're kind of ranging in a weird area. And how big is this range anyway? There's,
5 points,
that's 25, 1, 2, 5.
something like that. Yeah.
That's 25, 26, 27, 28. Looks like it's about 3 points,
Oh, okay.
at least to me. Maybe we'll call it 4 points.
3 or 4.
But it's just kind of a small range to be trading in, really. Uh, just it's just kind of small, so I would just be careful with tiny ranges like that.
What would you say is a healthy range size?
Well, think about it. If our average risk, I just kind of want you to think as a thought experiment. What
Hmm.
is our average risk per trade?
2 points, 2.5 points.
2.5 points. And what is our average take profit per trade?
Average 4 points.
Yeah, we want to take at least 4 points, generally speaking. Um, so if we add those together, then the absolute bare minimum range we can trade in is 6 points. That's the absolute bare minimum, and even that's cutting it close, really.
Okay, so go for 8 points.
Yeah, probably 8 points or more in a range for it to truly be tradable.
Yeah, like yesterday's chart was a perfect example. That was an 8 point range, and I was bouncing back and forth.
Yeah, absolutely, dude. That's absolutely right. That was like the pretty ideal size, even.
So skip those last ones. Also, like so you think after this like long down move, like you see like how the Bears are getting weaker and weaker, like that should have also been an indicator that maybe it was the move was done.
Yeah, and it was starting to get done. What day was this? This was
Tuesday.
26.
Tuesday.
Is this what I sent you? What did I send you? I don't know why I thought I had a 5 minute um, of that, but if we look at this major channel line, We have the open of the day, and we have this big, big push down. Nice little healthy pullback. What we can do a lot of times is we can start measuring the pushes down, and if it's in a big channel that's been bearish for quite a while, like the market's been relatively bearish as of late. Um, if it's a channel that's just been extending down for a long period of time, it's a little bit different. But we have a channel and it's just starting out kind of like this. We can look at a measured move here, measured move from this high to this low, and we can take that measured move and we can compare it to all these pushes down here, and we can, even if we're not looking for necessarily a measure, we can find about what each push down is giving us, relatively speaking, and then say that if push down is looking weaker, then maybe we want to be more wary of it. If you look at the new lows here, new low here and a big push down, we made a new low. Then once we broke that low, we had another really big push down. And then this time when we broke the low here, we just kind of floated around here. So
Mm,
bears aren't selling as aggressively for one reason or another, and bulls are beginning to buy. If you think about this on a really high time frame chart, this area down below here is probably a wick.
like a
And
double bottom.
yeah, you could call it a double bottom on a higher time frame. So that's something to pay attention to too. Is like it broke the low. Well, theoretically, bulls who bought, let's just say you're an institutional bull as an example, and you bought down here because you can time the bottom pretty much how you like, and you, as an institutional bull, you bought here, and maybe you wanted to create a counter trend pullback. So you do that. Where would your stop loss be? It would be right underneath here. But that's not what happened. It didn't really go anywhere. It just ranged out because we're starting to accumulate potentially longs. We'll have to wait and see, although we have a nice little break here. Either way, you really shouldn't be trading in this. Once this first move fails, there's really no reason to be looking to trade until the market picks its direction.
Understood. Yeah, that lower low should have been stronger.
Should have been, yeah.
Hmm.
Yeah, there's lots of evidence that says that it's starting to get weaker here.
Awesome. Thank you for that, Nick.
Absolutely, man. Um, okay, that's pretty much that day. Any
Yeah,
questions on this?
let's go to Wednesday,
Okay,
27.
big fat 2-7. Okay.
Did I send you a big file, 27? That's why you said fat?
I don't know why I said that, to be honest.
It's all good.
Sometimes random things just come out of my mouth. You just gotta go with it. Half the people in my life just pretend they didn't even hear it.
That's
All right. So, nice little second entry short here.
So this was the first day I actually sized up to two contracts.
Okay, nice.
You advised me to, so I
Yes,
started getting a little frisky, and I took the
good.
first profit there, and I didn't like those. I did not like those bull wicks, so I just closed it at my second thing, and it
Hmm.
actually stopped like one tick below the stop, and
Yeah,
then it went down.
and kept going down. Yeah.
Yeah.
Yeah. Some of these can be. tough to hold, especially when your first trade, doubling your contracts, literally trading two contracts, and then all of a sudden you're kind of expected to emotionally hold through a size that you're not used to as the price comes one tick away from your stop loss. It's a tough hold. It's a real tough hold. I understand. I don't blame you for just taking profits here. Not one bit.
Yeah, it looks like I had a question there. If that counts as a lower low, that second entry short after this trade.
After this one,
Yes.
yeah. So you have your first entry here. You have your pullback, and you have I'm sorry, lower low. I don't know why I was thinking lower high, but yeah, the answer is still yes because if we take this low right here and we draw a relatively straight line across, we can see that we broke it. And so, yeah, our count's going to restart after.
Yeah, I was actually talking about the low where the wicks were.
Oh, this
Would
one
that
right
be a
here?
low? Yeah.
No, so it's going to be the new low in this channel. So it's going to be, it looks like it's going to be this low here.
Got it.
Or, if there was, a lower one over here, then that would be the low. Well, actually, it looks like this was the low of the day at the time. If this was the low of the day, then it would have actually been this low where the count restarted. If it would, since it's in the same channel.
Okay, so I was thinking too much in the sense of like higher highs and lower lows. Like I was looking too thinly, I guess.
Yeah, I guess so. I guess you could put it like that. It's since we're in a big channel like this, and the previous low happened in the channel. The previous low happens to also be the low of the day in this example. Then this is going to be where our count restarts,
Okay, cool.
right in there.
So that second entry, sure, that wouldn't have been bad.
No, this is proper right here.
Yeah.
You rejected the 20 EMA, climactic bull bar. Not a bad trade. And actually, your profit target too would be down here. So yes, very nice.
Cool.
Okay, and this one. So you didn't
Yeah,
feel
I
did
put a smiley face because I was right.
you absolutely, dude. If you don't feel comfortable with it, then by all means, just do half size. Um, there's nothing wrong with that. You got stopped out by one tick, no big deal. One pullback, two, technically a double trap.
Yes. Okay.
And see it? One pullback. There's your second entry trigger,
And
and
second entry
then
low.
it pulls back, stops out bears, but it's a climactic bull bar, and then you have this big bear follow through here. Something you should be careful of, we briefly spoke about this, is this barbed wire trading here.
Hmm.
Oftentimes, in barbed wire, if we just want to go ahead and jump into barbed wire, um, I don't know, I guess you could call it theory or ideology, but if you want to talk about barbed wire is generally a continuation pattern. It's generally something where you will have a false breakout and then you will have a sharp move in the other direction. So in this case, we have barbed wire, doji, 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 doji. We have a false breakout being this climactic bull bar, and then we have the actual trade in the opposite direction, which is
Mm-hmm.
actually the with trend direction. So
Mm-hmm.
beware of things with lots of wicks. It's one thing if this one bar here has a lot of wick here, but in this situation there's 1, 2, 3, 4, 5, 6 bars, and there's 1, 2, 3, 4 bars in a row before you even put your trade on, before you even get filled, that have tiny bodies and long wicks. So, be real careful of entering in that area.
Roger that.
Okay, but
Yeah,
I'm
before
glad
you
you only
told
did
me
it with
about
one.
the barge wire theory, I could just tell it was fishy already.
Yeah, I mean, it definitely is. Definitely is. I'm glad that you did sense it out though, and you only put one contract on. Real good thing to do. First entry short, pull back, and second entry short here, right?
Correct.
One, yep. Okay, took a trade there.
Um, I
So
actually think no, it looks like I did an engulfing second entry short on that green bar.
on this one, so you did.
On the after that red one, after the push up, red bar, green bar, it was engulfing. So it gave me a first entry short, shot up, it wicked above the channel line. I think if I'm correct.
I gotcha. I see what you mean.
And that's why I have another first entry short at the drop.
Gotcha. So you were here and here. So let's look at this trade here, because you kind of missed. Oh my god, this thing is the worst to deal with. You kind of missed a really big move here. You took 2 points, but you're at the top of the channel here.
Yes.
We can't just go for 2 points at the top of the channel. Our profit target needs to be down here. If we're taking a second entry short at the top of the channel, especially in a situation like this where we've pushed up, we had a push down, we had a push up, you could even say that this is a double top here.
Mm.
Second entry short. Our profit target has to be the low. It just has to be. Even if we trail highs, see, we just miss it, and we can make our full profit target.
I had a
There's,
lot of things wrong with me on that one.
yeah, if you have a really obvious profit target, go for that profit target. If you have a profit target that's not so obvious, then you can consider just going for a 1-to-1. But especially on big trades like this, we're really selling ourselves short. Remember, most of our money is going to come from about 20% of our trades.
Got it. Yeah. I gotta hold. I gotta hold.
Got to get the hodl.
I gotta hold. Huddle. Hold on for dear life.
Hold on for dear life. 2, 1, 2. Interesting. That is a tough entry.
I think that was the one that you were telling me that it was like it was a range, and then it escaped the range a tiny bit or something. You messaged me about it. We were
Yeah,
gonna talk more about it.
that's right. What day was this? 9/27. Let's look at mine real quick. Okay, come on. It's a picture. Let's go. So we were. Where were we? We were at about
11:30.
13, and then which is like 10:13 for me, I think. Are we in here? No, wait, that's
Yeah.
not a picture. It was 10:13, so we were in. Oh, yes, we were in here. Yeah, so I kind of this didn't really end up being quite as much of a range as what I thought, but I put this line up here um, relatively quickly, thinking that it was going to be a range because I didn't feel like this move had a whole lot of follow through. But if we look real closely, we see one of my favorite entries in a range, and that's when we have a channel, a break of that channel, and another channel up. And it can be thought of as in two different ways. Let's go back to yours here. Channel, break of the channel, and a new channel to the top of the range. Horribly drawn on this program.
It's okay.
But basically what this is, so it when we I'm going to try to think of the best logically progressive way to explain this. Uh, Another way to count legs is through channels, and you can think of these channels as measured moves, and each one has a measure. So one of the best entries that you can find in a range is a channel that generally pushes up, let's just say halfway up from the bottom of the channel, and you have a break of that channel, and you have a new channel that pushes up from about the middle to the top, and it is an approximate measured move, or you can take it as a failed measured move, and you can take that entry short. So in my case, I assumed that this was a range. I assumed it kind of early. Maybe it wasn't quite as rangy as I anticipated, but I did assume that this was a range. I had the top marked here, and I saw this channel working up. I'm just going to draw the bottom line. And then I saw this other channel. Saw this big break, this bear bar, climactic bear bar, and a push up to the top, which is where I took my entry at, and notice my stop loss is outside of the range as well. And then I took profits here, thinking that it was a range, when obviously it would have been a lot nicer if I had held it.
Nice. So that break of the channel, you're saying it was half of a measured move.
Yeah, thought of it as a failed measured move. There's better examples out there than this, because it's hard to see this as a channel. It is a channel. It's just hard to see it as a channel, just like this is a channel. Oops.
Yes.
You know,
Yes.
you get what I mean. It's just
Yes.
really, really hard to see. But if you expand your thinking and you start thinking on like a microscopic level, so to speak, then it's different. You think about like this is a 2000 tick chart. What's happening on a 30-second chart? What's happening on a 1 minute chart? On a 10-minute chart? You think about all these other time frames while you're in this too. So probably wouldn't have taken that if I didn't assume that it was a range. But this channel break channel is a very nice move to have in your back pocket, especially in a range. Not always, not always quite as effective taken outside of a range. You're probably more likely to see it, something like a double trap, than you are like at the top of a range. But it's really nice to have around.
Okay, cool. So that's why you draw your channel skinny on top of each other like that. So after the move, you would redraw it.
Yeah, so let's look at the picture. I had that drawn just because that's my thinking, but I mean I drew the channel right after that.
Mhm. But if it was like, let's say it was a failure, then you would redraw the long channel line.
If it was a failure and it just continued up,
Yeah.
then yeah, I would probably just assume that I was wrong and go ahead and delete these.
Draw a long channel line.
Yeah, yeah. Oh, or rather than draw that. I mean, I don't know. I don't know if I would have done it in the moment or not.
It's all good.
I kind of did there. I kind of did there, but I think that's just for. I mean, I didn't take any entries in there.
Yeah, it's just for you.
Yeah, I don't know if I would have drawn it or not, to be honest.
Cool. Well, that was a good trade that you took.
It was pretty good. I was
Yeah. So
maybe a little lucky.
cool. So then after that, I just called it for the day once it dropped.
Awesome. Let's look at 28.
Yes, please.
Let me look at the big picture for 28 real quick. Okay, so we have this really large channel line, and we have some smaller ones. Okay, so whenever I'm looking at this line right here is the major channel line, I'm guessing.
Yeah,
And this run right here is the minor. Okay.
correct.
Alrighty then, let's look at these entries. Waited till up here. You didn't fade this?
Um, which one? Which one are you talking about?
You didn't fade in here?
The short? No, I skipped that.
Okay. I mean,
I
I'm
for
glad
sure
that you skipped it.
would have bumped it. What's up?
I'm glad that you skipped it.
Yeah, see, you see what I was telling you that I learned like from earlier in the week when I was like from trying to short those huge push-ups.
Mm-hmm. Yeah. There are a lot of very nice looking bull bars previous to this. Okay, so this was the original channel line here.
Right.
And then you had your first entry, second entry, stopped out by a tick. First
Yeah.
entry,
Yeah.
second entry, winner. Or winner,
Yes.
winner, chicken dinner.
Yes. Yeah.
So
Yeah.
this was the.
This day. Go ahead. Go ahead.
Well, I was just going to say this was the day that I watched you lose this trade. I remember getting this email, and then I saw that you re-entered here, and that was a really good re-entry. Like it can be hard to take a loss and then just immediately enter again, and that shows a lot of emotional discipline being able to do that.
Yeah. This day I was a fighter, man. Like I was just. It's not that I wasn't taking no for an answer, because then like I'd be like chasing price. It's
Hmm.
just I just thought it was good. You know.
Good, man. I'm glad you did. It's completely logical too. Like we're at this huge channel line. This channel line's been valid for quite a while. I mean, just this picture alone, this picture is, one, two, looks like it was probably valid for 3, 4 days at a minimum. Where we go?
I also remember feeling very patient, like you said, like I skipped that middle one where it was like in the middle. I didn't
Mm-hmm.
like it. I was just waiting for this area
Good. Very nice. And then you were rewarded very nicely here.
with that two contract one. With that last one, actually, with this last one, I got a little lucky because I had my two contracts in, and I was gonna put one order at 2 points,
Mm-hmm.
and I accidentally put another short, so I was in three shorts, and I took like it was like 11 points in that move.
Really?
Yeah, that I had. That was like my biggest winner I've ever had.
Dude, that is awesome.
Yeah.
Yeah, let's see. Yeah, you did have quite a win, didn't you? Nice. That's awesome, man. And you did it with 3 contracts?
That like yeah, when it was like a point or two in, I
Mm-hmm.
was gonna put the thing, and then it filled me in another short. It said three at my stop loss, three at my profit, and I just held. I was
There
just
you
staring
go.
at it,
That's
and I
awesome, dude. Way to go. That's so great to hear. That is awesome, man. Yeah, sometimes mistakes can be big winners. I was, just a quick story. I was going to take the day off trading one day, and I just didn't really feel it, whatever. And then somewhere in the middle of the day, I decided just for the hell of it, I was going to make a few trades on Sim. Maybe I was going to play some video games while I did it or something. And I accidentally got my accounts mixed up, and I was trading off my Apex accounts, and I made like $1,200 that day. Thinking, and I didn't even realize, the account I was trading on. I was taking stupid trades on Sim, and I got
Wow.
lucky. I got so lucky.
Cool,
But
man.
the market doesn't care if you mess up or not, and sometimes it rewards you for that. So I'm real glad to hear.
Yes, but it's also important to still be cautious because not that it's gonna happen all the time. Because leading into my next chart, my
Oh
next
no.
turn, like yeah, I got a little comfortable with the three contracts. But honestly, it's best that it happened now because I was thinking to myself, like, even if it was like the $300,000 account or whatever, like three, four contracts, in this trade right here, I would have put all the money on it. It doesn't matter how big the account was. That's how confident I was, and
All right.
so I shouldn't have put all the money on it.
Let's see. Lower.
Well, I was just watching like literally 2 hours. Like I just did not see anything that I
Mm-hmm.
liked, and
Good.
maybe that should have indicated something like the day was rough. And this is also something you mentioned, it was choppy, you know.
Mm-hmm. I know. I
I
remember
sent you
this
my five
day.
minute chart for this one too. Yeah, I
This
sent
was
you. This is the
Friday.
one that I sent you everything. Sorry, go ahead.
Yeah. So this from my perspective, yeah, was it in here? Yeah, it may have been in here. When I first looked at the charts, I was doing the same thing. I just watched for like ever because I just felt like I saw these chop zones and it wasn't really like just a straight up pullback, and I just didn't really like it. Kind of like you. Um, so let's talk about this. So
And I
this
was
is your
wrong. I was right, but I was actually wrong. Like price went up, but then it actually dropped after I called it.
hmm So
Continue,
you
Paul.
traded three contracts here.
Yeah, all these trades are three contracts.
Oh no. Oh no. Yeah. Uh, sometimes confidence gets the best of us. I mean, it really does. I swear, the trades that I am like the most confident in are losers, and the trades that I am the most unsure about are some of the biggest winners.
Mm.
And I don't know why that is. It just has to do with the market and the fact that you can't think like a normal person and be successful at the market. You just simply can't.
It's also a little bit of ego.
It kind of is. I mean, you got a good point there. It really kind of is. The thought that we're such a good trader that we just know everything that's going to happen in the market. Um, I'm not going to lie to you, man. I used to be like that a lot, where I felt like I was so good at reading price action I could just predict anything. And it's not true. We can have a guess, we can establish a probability, but we never truly know what's going to happen. We just can't. Um, let's do this. Let's look at my charts for that day. I have them
Yeah, your charts
saved.
are killer.
I
I
have them
was gonna
saved.
say if you do make this video public, the audience is for sure gonna want to see your charts on this day.
Fair enough. Fair enough. I don't even remember what day it was. Was it? Was it 20? It was 29.
28, 28, 29, 29, yeah.
Oh, 29.
It was 29, sorry.
That's 28. I have 28 in here twice. I think I miss. I think I said that it was 28 because I don't even know what day it is half the time. Was it today? No. Was it this 28? No.
That looks more like it.
You sure?
No, I'm not.
Oh, wrong one. I need to go to the picture. I stored it somewhere.
You texted it to me also.
I did, but I stored it someplace different on my computer, and I don't remember whose. Oh, here it is. I stored it in my next meeting's outline. I guess that was the one that we were looking at. So. Oh no, this is it right here. Yeah, okay. Okay. So. So when I was looking at this day here, I opened my charts just a little bit late. Actually, it was like 9:40, or I'm sorry, 8:40, 8:45,
Sure.
something like that. And the first thing I see on my chart is this. This is the only thing that's developed since the market's opened. And I look at it and I'm like, geez, dude, this is not going to be fun. I'm going to have to be extremely patient today. And then I find my first entry I consider I did not take, and that was this second entry here, and I marked it as risky.
Mm-hmm.
And then I identified, so I can't go back unfortunately, but this was a previous low and it ended up being a support. I just had that line there as, for the sake of awareness. And then we got near it here, and I went ahead and marked this as a valid entry. Or, I'm sorry, if you did take this and you bet on the new low, which, like I said, I didn't, then you would probably get stopped out in here once the uh, uh, previous high was broken. Maybe you
Yeah.
took profits here, maybe you saw that, maybe not, but you probably took profits, or I guess, up in here somewhere.
Mm-hmm.
Somewhere in there you would have looked to take profits at the break of this channel, maybe. There's lots of different places you can consider it. Like I said, I did not take this. This was my first entry right here. I walked away for a while and came back. And when I came back, I saw this entry. It was an entry long. And I don't know quite exactly why, but I tried to get filled on a limit order and I didn't get filled. But then I saw that it was a really weak response. What I felt like was a weak response off this major channel line. This is the major channel line right here.
Mm.
I felt like there was kind of a weak response. And so I was thinking to myself, and I was like, okay, um, well, we have a small channel here. Maybe it'll be channel break channel to a measured move, and I marked the measured move here, and it'll present me with a second entry short, and I'll take this short. However, we hit the measured move, I get presented with a first entry short, but I never get a second entry trigger. Our second entry doesn't trigger until up here, kind of hard to catch. Once this happened here and the price started racing down somewhere in the middle here, I stopped and I went and I looked at my 5-minute chart. And on the 5-minute chart, it is a climactic bull bar. This leg up from here to here is a climactic bull bar on a 5-minute chart. Because a climactic bar not only happened, but happened at a major channel line, it was a really big bull bar too. I assumed that the market was likely going to be in short now. And so this is where I look to take my shorts. So you have first entry, second entry here. This was my first short coming off of this channel line, also rejecting it. Second entry short again. Second entry short, first loser here.
Mm-hmm.
and there's, I didn't mark it, but I actually had an entry in here as well. And then see this beautiful profit target here. This is why we want to keep up our profit targets. I'd be shorting myself if I only went for 2 points here. I went for the previous low here, and I got stopped out. I lost, I don't know how much I lost. Let's just say 2 points. But then I come back here and I make, you know, I don't know how many it was, maybe like 6 points.
Sure.
And so that's why our profit targets matter so much. Lots of chop in here, did not consider anything in here. And then we're on this big trend. Look at this real quick. This is beautiful. This right here is a failed second entry long and a second entry short. So if we're counting for the bulls, 1, pull back, 2, and if we're counting for the bears, we have a new low, 1, pull back, 2. So it is both a second entry short and a second entry long failure, which creates a very, very strong reaction. Made a lot of money there. Next loser was here, where we had 1, 2, and then I got filled by 1 tick and got stopped out. We hit the double top. I counted that as a 1 and a 2 here. And so I got back in on this trade. So it got easy, you know, once this major channel line was broken and we got to see exactly, you know, that the market was bearish. It got a lot easier. But even, you know, if you took this long here, you know, if you get filled here, you're either going to get break even or you're going to get, you know, a pretty good profit here. But after that, though, like we're all in short, and we should be aware of that.
I actually sent you the 5-minute chart for this day because I wanted to talk about the climatic bull bar that you mentioned.
Okay,
there.
perfect.
When you say climatic bull bar or bear bar, it means that the bar before it, or the bar before the bar. Okay. So that means the bar before it.
So,
or it would be the one that the bears after would cover the whole thing.
So, just take an example from today. By the way, did you just send me that email, or was it in my? Was it in the 9?
The one from today, I sent you that earlier.
Oh no, I mean like the one from the 5. Oh, here it is. I got it. Yeah, we'll use.
Minute one. Like one is like I wanted to show you like how I was like thinking it's like 3 days like this long channel.
Okay.
And then the other one is like a little bit closer.
Oh, there we go. Yeah. So the original channel line was drawn through here. Let's go ahead and download this. I haven't drawn on here yet. I did on some of them. Some of them I took, I think. The original channel line before it was redrawn was in here.
Something like that, yeah.
Now, you can say it's kind of a weak reaction here too. But then we have this giant bull bar. So this huge bar right here, why is it climatic? It's climatic because there's no follow through to it. So something like this, if you're let's just say you have a bullish bias here, and you see this huge bull bar, and you see it, and you're like, wow, that's really strong. I think that the momentum is going to continue. And then you're suddenly really, really disappointed. That is a climactic bar. This bull bar is climactic. What it essentially means is that the bulls have had a quick spurt of energy, and then just as quick as they were buying, they're now ready to dump. It's a lack of conviction. It looks really strong, but it's actually really weak. And we don't truly know that a bar is climactic until one of two things happen. In this scenario, as soon as the bar formed, and I'm watching this on the 2000 tick chart, as it quickly rushed to somewhere in the middle here, I stopped, looked at the 5-minute chart, and saw price having a lot of volatility pushing down, which made me assume that this was going to be a climactic bar. But we don't know for a fact that it's climactic until its low is broken. Once its low has been broken, we know for sure that this is a climactic bar. The other way it can potentially be climactic is if we have a big bull bar like this, and this is maybe not the best example, but it is an example. It's not bad. You can think of this bull bar here as a climactic bar. It's an especially large bar. It has a decent close. Could be a little stronger, but it's decent. And what is its follow through? Well, it's only about 2 ticks away from being an inside bar. That's not really what you expect once you see a lot of bullish momentum. So you could call this previous bear bar, this large one here, climactic because it has a lack of follow through. And if we waited one more bar, we would get a bear bar, another bear bar, small range, basically validating our theory of this being climactic. Maybe it'll go a little bit further. A climactic bar might go just a little bit further than where it is, but it won't go very far. This ended up just being a range in this situation, really. Does that make sense about climactic bars?
Makes perfect sense. Thank you for the clarification. And going back to this drop, yeah, it may have been valid to maybe buy in that area where I was buying because it was outside the channel line. Like it was 3 days, like pushing up, whatever. But and I didn't think it was going to continue going down. But that just goes to show that what anything could happen and price. What it could hit the floor or what?
Yeah, I mean, that's absolutely what it proves. And it proves, too, that no matter how strong a support or resistance is, it will eventually fail. Um, and, you know, a lot of people are right about something breaking through or failing or things like that, but they're wrong about the timing. We got to get the timing right, too. Um, but at least to me, a weak reaction here and the fact that this large climactic bull bar, this right here, the fact that that formed, just to me, it just screamed short.
Mm-hmm. Okay, okay, great. So I'm glad we got through that, and I definitely learned my lesson.
Absolutely, dude. It was a tough day. I don't want you to beat yourself up at all. The
No,
fact of
I
the
did.
matter is, though, you found a valid entry at a valid point. You just, well, I guess I don't have the charts up right now. You just maybe entered a few too many times. Let's look at it real quick.
Yeah, maybe just the first one. Maybe just the first one. So like literally all these areas you were shorting.
Yeah, yeah. Uh, um, yeah, I would say that maybe so. This was the climactic bar right here. Yeah, you were definitely going short where we should have been going long at here. It looked like you were just. It seems like you had a really big bullish bias. Because even if the channel line's through here, here's a one, two, fade, failure, fade, failure, fade. I mean, we failed to fade it twice. So it probably should have been. You probably should have been a little bit more neutral on your mindset, but that's okay, man. It's completely
Yeah.
okay.
And then today it was just one trade. I got lucky with today actually. It was just like you pulled it up on your chart.
Yeah,
Yeah, you had your video. Yeah, literally, I right there. I got lucky. Like it just gave me my 4 points by right there,
that's
and then it
perfect,
shot
man.
up.
Yeah, that's perfect.
Yeah.
Yeah, today is uh, relatively tough. Let's see what it's doing right now, though. Zoom out, zoom out, zoom out. So we've broken the range bearishly. So we were just talking about range fades. This is what I mean right here. I just want you to see this because this is when I started to become a good trader. And I'm not going to focus on the fact that there's like a double trap here. We talked about that already some. But for whatever reason, let's just say you betted on either this double trap, or let's just say that you took this second entry short here. Let's find out where your risk is real fast. Make that straight. In this situation, you are risking 2 points. So average
Okay.
risk. What is your take profit? Let's just assume you don't bet on a new low here. What is your take profit? 22 and 3/4 points. That's insane. You know how many people in
Yeah.
this world can risk 2 points to make almost 23? This is what defines great traders right here. Is the few times, the times that they're sitting here watching and they're taking, 4 points of this and 8 points of this, maybe 10 points of that, and maybe they feel good about 10 points. But it's these rare situations like this where we can risk 2 points and make 23 points that truly makes us money in the long term.
Especially if you're 4 contracts in that one.
Oh, yeah. And I mean, I normally run 4 contracts at a time, but I promise you, there's people taking this exact same trade running 25, 50, 100 contracts. Those guys are pros. And I mean, you could still even continue to hold this if you were just extremely patient. You could still be holding it right now.
Going back to that comment you made about the contracts, I want at what threshold do you think like 1,000 contracts? Do you think before it becomes like not laggy, but like you said, the institution takes time to like fill. You know.
Yeah, so that question is going to completely depend on what the market is doing right now. It changes literally every second. Every second that we're awake, you know, however many contracts can get filled within relatively right amount of time is constantly changing.
Mm. So you
And,
think like bro, like 25 when you get to 25 contracts, like that should fill? That's not too crazy big, right?
you might have a little bit of trouble with 25 every now and then. Uh, I don't trade 25 contracts, so I'm not 100% sure about how well we do get filled on something like that. But I would imagine that 25 contracts you'll be okay most of the time, and every now and then you'll struggle. Like just the other day I took a trade, I guess on Friday or something, where I was just trading my 4 contracts. It's even way less than 25, and I had a stop market uh, order in to go short on a trade, and the move happened so quickly that I actually got filled a point later than where my order was. So in that situation, I mean, the market struggled to fill four contracts because there were so many in the market. So it really it varies like just time by time. It has a lot to do with the bid ask spread.
Interesting. Interesting. Well, Nick, I just want to thank you also for another amazing class. Like, I'm gonna get there. I already know. I'm not gonna give up doing this
Absolutely
every
are.
day.
Absolutely are, man.
Yeah, it was cool. Also, today I was taking down all my last month's display, all 20 charts, and
Hmm.
it was really cool to have it all there. And I'm looking forward to building the year and then the years to come. I'm just
Absolutely.
gonna have like a little bit of an Al Brooks record.
Absolutely, dude. Keep those and look back on it a year from now and feel free to cringe at yourself. Because, so I have, mine are mostly like screenshots. And I have like old screenshots of like my old analysis. In fact, I was actually looking through some of it this weekend. And I'm looking at it and even from like 3 years ago. And some of the things I said, I kind of just laugh at. And I looked at like my past success rate in sort of like predicting things. And I guess I was doing okay about 3 years ago, but I wasn't. I don't think I was as good as I thought I was 3 years ago.
I also want to thank you, Nick, for your time because the more I've been trading with you, the more I realize that it's like these classes are way below your pay grade, and like you've mentioned that before with like other students and stuff like that. So I'm just super grateful.
Well, I appreciate you, man, and I really do like helping others. And man, it's been really great working with you. We've been working for what 6 months or so,
Something like that. Yeah, starting from like February, and it's been amazing.
dude. Yeah, I love hanging out with you, man. It's a lot of fun. Um, you should,
Likewise.
if you want to, you can schedule a time with me. I'm pretty sure I don't have anything going Friday. If you want to, you can schedule a time with me Friday, and we can trade live.
Okay.
Sweet.
Okay. We'll do that. Thank you, Nick.
Alrighty, dude. You have a great day, man.
Have a great day. Have a great week.
Later, Charles.
Later.